Hi everybody, welcome to Jin's Wall Street News. The US Bureau of Labor Statistics reported last Friday that the unemployment rate rose from 4.1% in June to 4.2% in July. In addition, total non-farm payroll employment increased by 73,000 in July, below expectations of 100,000 gain. According to the S&P Global US Manufacturing Purchasing Managers Index, decreased from 52.9 in June to 49.8 in July. The US Census Bureau announced last Friday that construction spending fell 0.4% in June from the previous month. 10-year Treasury yield falls to 4.25% after July's jobs report was released at 8:30 a.m. last Friday. Dan Niles, the founder of Niles Investment Management, posted on X on last Friday, quote, "I still believe new stock highs are ahead of us, though the current decline may have a bit more to go." The US Bureau of Labor Statistics reported last Friday that the unemployment rate rose from 4.1% in June to 4.2% in July. At the same time, the labor force participation rate decreased from 62.3 in June to 62.2 in July. According to the establishment survey data, total non-farm payroll employment increased by 73,000 in July, below expectations of 100,000 gain. However, what most of investors focused on is dramatic revisions in the May and June totals. US economy added only 14,000 in June, revised down from 147,000, and 19,000 in May, revised down from 144. According to the S&P Global US Manufacturing Purchasing Managers Index, decreased from 52.9 in June to 49.8 in July, up from the preliminary estimate of 49.5. The S&P Global said, quote, "Weakness in the headline PMI reflected some softness in market demand, with new orders up only fractionally and to the weakest degree of the year so far. A weaker trend in sales weighed on output volumes in June, with production growth softening since June and only marginal overall." The US Census Bureau announced last Friday that construction spending decreased 0.4% from $2,143.9 billion in May to $2,136.2 billion in June, down 2.9% from $2,199.8 billion in June last year. According to the Federal Reserve Bank of Atlanta, GDPNow estimates US real GDP growth at 2.1% for the third quarter, down from 2.3% on July 31st, updated based on the jobs report, ISM manufacturing PMI, and the construction spending. 10-year Treasury yield falls to 4.25% as investors were shocked by the labor market deteriorating more quickly than expected. The US dollar index tumbled after the jobs report released at 8:30 a.m. last Friday. For the US stocks, S&P 500 dropped 1.6% and the Dow Jones Industrial Average fell 1.23%. The tech-heavy Nasdaq tumbled 2.24%. When it comes to Friday's sell-off, Dan Niles, the founder of Niles Investment Management, posted on X on last Friday, quote, I think the tell for today's weakness in hindsight, which fortunately is always perfect, may have started on Wednesday, when despite two Fed governors dissenting and wanting to cut rates, the press conference was taken as bearish and the S&P closed slightly down for the day. And now today, instead of the market cheering a weak jobs number, great, the Fed can cut. It is instead, oh no, the Fed has to cut. So where does that leave us? Monday should be telling. I still believe new stock market highs are ahead of us, though the current decline may have a bit more to go. I'm betting on irrational exuberance in the near term, but maybe I'm the one being irrational. Okay, this is the end of today's news. Thank you for watching. Have a great day.